Hey, good morning, folks, and welcome to our SwingSCANS event for the day. Big turnout and really good to see y'all here. Got some really good charts I'm going to look at today, and I'll give you some heads up on the type of patterns that I like to spot for traders. My SwingSCAN service has been very popular. I've had hundreds and hundreds of members over the last 15 years or so. I've ran it. It's been on a hiatus this past year, but we're bringing it back. So this is the weekend. So glad to see folks here. Well, I hope you all are doing well in today's markets, right? There's no excuse for not doing well. The charts are so easy to trade, right? The challenge is making time in your busy day to fix it and find the right charts and then knowing the trade management skills to help you make the most of your entries and exits. So that's what we're going to look at. Hey, let me see. All right. Opening the chat here. And see when we're starting. Hey, good to see some familiar faces. Hey, Barry. Hey, Evie. Hey, Dave. Hey, Phil. Hey, Rick. Hey, Rick. Yeah, a lot of familiar faces. Good to see you folks back. It's good to be back in the saddle again and get underway in just a few minutes. There's some nuances, some differences in the types of patterns that are worth trading in our current markets compared to what we were trading last year and the year before, right? So we've got much bigger ranges, which makes it much easier to trade. The challenge is figuring out how to scale in or use position sizing correctly. So the biggest challenge is always is finding the right dang charts, the right dang time to trade. So that's one thing that I've learned quite a bit about. So I'll share what I've learned in today's session. Hey, Barry, how you doing? And Barry, yeah, if you want to get in the room, just let me know and I'll let you get back in. Good to see you. No, looks like it's not a go for that one that you mentioned. Let's see where it's going. All right, so we'll get started here in just a couple of minutes, and good to see everybody here. And I like this new what do you call it, TC 2000 software. It's really good. It's I learned from my traders some of the different patterns that it does a particularly good job of looking at. So, and anyway, let's go ahead and start in just a minute. And a shout out to Harry Boxer from the Tech Trader for turning me on to the software in the first place. It's really good. I like it better than eSignal. I've used eSignal for 20 years. I like this because it's very clean and easy to use. So, and a very good signal. So, all right, well, let us get this party started in just a minute. Let's see. It looks like it's recording, so that's good. All right, well, let's get started. So, good morning, traders, and welcome to our SwingSCANS premier event today. Just wanted to give you some heads up on the type of charts that the service looks at using charts from our current market, of course, and answer any questions you might have, and also go through some of the different patterns that are worth trading in today's markets, and also how they're different. Some of the major differences from what we've learned in the past for swing trades compared to what our current market looks like. You know, with Trump in office and things are starting to look good, we expect things to continue to rally in some sectors, not in others. What we want to look for is the technical patterns that are best for trading in our current market. So with that as a kind of a lever or leverage point, with that election outcome, we're looking for some really good positive things in the market moving forward. So let's take a look at some patterns here and we'll see what's going through. First one is gap continuations on high volume, right? Now, this is not my favorite pattern, but it's still worth looking at for a swing trade, especially over, say, a whole number like 10. One thing I found in all my trades, millions of dollars worth of trades, is there are not only technical resistance levels and support levels, but there's range-based support and resistance levels using box trading ranges. So, for example, the range here is what? Just about $1 to 3. So that's $2. So we have the range here, 2 to 10, much bigger range. So because of the expanded range, that's one thing that tells me it's a hot stock or it's a good instrument to look at. So compressed ranges or candles get bigger. That's one pattern to look at, especially on a gap continuation. Okay. And here's one that I like much better. The reason is it's got more consistent pattern, HIMX. You can see this went from 5 to 14. It tripled. And this is a 3-month chart? About November to right now. So 1, 2, 3 months, right? Went from 5 to 14. Now, obvious resistance was 10, and the breakout's right above it. Now, this points out one key point, and that's that I always like to use numbers that are comfortable, that everybody's familiar with, like 10, right? And look for entries, not just at that number, but maybe 20, 30 cents above the resistance level. So you avoid a false breakout and get in on the one that keeps running. Now, is this too late to get in long in? Because, hey, it was only $5 a few months ago, and now it's 14. No, of course not. It could go to 20 or 30 or 100. Or it could go back down to $2 or $3. We have no idea. All we do is trade what we see, not what we think, right? So a breakout on this would be, say, over 14.4. And this would be the kind of chart that I would have in our members area for SwingSCANs, because it's really, these are all actually, this would be this week's picks, or these charts that I'm giving you for free here today. They're really good charts, and they're all worth trading, in my humble opinion, because they all have good strength. What else do you see? An increase in volume along with an increase in price. That tells you got not only buying high volume, high breakouts price-wise, but they're also buying on increasing volume. So that's another good signal that we've got a live one. Now, what happens though? The real world of trading is every trade should be thought of as a sequence of, say, 3 trades. No less than 2 or 3, even as many as 5 or 10, but never just a single trade. You never ever look at your swing trades in a single trade approach, because you'll always get shaken out and you won't get in on the one that runs up without you, right? How many show of hands have ever been in a trade where I always say there's a money show events and everyone's hands go up. How many of you traders have ever been in a situation where you get into a trade, it looks great at the time you got into it, it goes back down and stops you out, and then it runs up without you, right? It's been very frustrating. I used to do that back in the 90s, and it gets frustrating. What you learn is, over time, you maybe break the trade in half, put on half the trade. If it stops you out, that's okay. You buy the new high. Maybe that stops you out. Try a third time. If that stops you out, well, maybe it's not meant to be. But often the second or third trade will get you in the money. And that's the saving grace of the approach I teach. It's not just a magic chart pattern and a magic entry. It's a process of trade management. And ask any professional trader. It's always about, like my colleague, the brilliant Tom Sosnoff says, trade small, trade often. That's exactly 100% correct. Law of large numbers, you're not going to make it if you're trying to be a sniper and take a single shot. You got to have several snipers on Overwatch and take a few shots at it. Maybe the first one doesn't work, or maybe the first one works, the second one doesn't, and the third one doesn't, but the fourth one does. It's a sequence of several trades. That's really important if you're going to make it as a swing trader. You have my word on it. Extremely important that you learn, and I teach how, so that's one thing to look at with charts like this. Here's another wonderful chart. Note the range. The most important part of any chart is the column on the right with the numbers, not the chart pattern. What's most important is range, okay? Of course, a nice clean 45-degree angle breakout is great, but range is more important. You have a wonderful chart, but if the range is like 20 to 22 bucks, who cares? You're not going to make any money, or much money. The risk reward isn't there. But a range of 15 to 40, okay, now you got my attention. Another thing too, you want to start small, like in poker, right? Maybe you got a pocket pair or something. You want to underbet, maybe flat bet, whatever. I won poker championship 9 years ago. You put out a small bet and see where it goes. And if it keeps going up, then you scale in. And if it craps out, you take a small stops, right? Anyway, this is a big range. So this thing went from 15 to 40. And so it's a great range chart. This is one that has a nice classic uptrend with higher highs and higher lows with a series of a couple of bullish cut patterns. The problem about cut patterns is they almost never work out from the beginning if you use a hard stop and a hard entry. It's always about using that as a general kind of a roadmap to get you head in the right direction, or maybe a compass that gets you in the right direction. But the specifics of your entries and exits have to be a little more sophisticated than that. So, but NBIS is a good chart from 15 to 40. That's the reason why, and it's taking out new highs on good volume, is a good chart. Here's another one, CLEU, C-L-E-U. That's China Liberal Education Holdings Limited. Okay. Well, whatever, it's ran up to just under 5 and now it's over 5. It's a nice high volume gap continuation. I like gaps that continue up and keep going up on high volume. That's another good pattern. So this one is a good one that's up near 5 a share. No, this is Clover Health Investments. And it's what I like about this one is what? The recent range. That's one thing you want to look at too, is recent, and the ratio of green to red candles. If it's all green, that's all speed, full steam ahead, right? That's what I call a full steam ahead, or a speedboat chart. It's like a speedboat going faster and faster. 3 1/4 to 5, not a great range, but it's a consistently uptrending for the last several weeks. So it's almost, 3 weeks of uptrending with large green candles on high volume. this is a good candidate for long up here over $5 a share. Now, another thing that I'll mention is we never buy right under a whole number. Never in life will I ever buy anything with a 9 in it. You sell 9s. You buy 1s and 2s, you sell a 9. So I'll buy the 510, the 520, I'll sell the 580 and the 590 to you happily. But then I'll pocket the profit. And it drops down to 540, then gradually gets up over 6. Okay, I buy 610, 620. It bumbles back down to 596. I stay alive. It keeps going up. Now it's 670, and I take profit, and it goes down. That type of thing. You go in the right above whole numbers and tighten in this trailing stop at least as you get near the nearest whole number. All right, so everybody with me so far? All right, good to hear. So this thing's gone 3 to 5. It's almost not a double, but a big percent gain, right? So this is the kind of chart you want to learn from. Here's another one, hood. Like, where my girlfriend's from? Right there. 25 to 50, it doubled. Okay, it went from 25 to 50, it doubled, which is great, right? It went from here to there, and it's done so in a nice continuous uptrend. Now, these kind of charts, I like to say, feed the winners and starve the losers. So you feed it on the way up, and if it bumbles sideways for a while, maybe you stop out and you get back in, it keeps going up. Okay, now you're back in the money, playing with the house's money, and you add to it as it breaks out over, say, 51 or so. Notice, please, the range. Range is critical. It's more important than the chart pattern. Really, it honestly is. Range is like 70% of it, 30% is the chart pattern. 70% of the success or the money I make in my trades for the successful ones is based on the range. So that's really important, 25 to 50. That's a doubler, okay? And what else? One of the things you want to do is use break-even stops wherever possible. That's another core tenet that I teach at both my Day Trading University live trading room with so many members from around the world, and also in the SwingSCANS service that I'm bringing back to life. Right now, we've got break-even stops. So if I buy, say, 51 and it goes up to 52 or so, it goes up even a point or two, I'll put my stop loss up at break-even. And sure, I take more stops, but they're break-even stops, so I don't care, right? Taking a lot of break-even stops is just a waste of time, but not of money. Money is what you don't want to waste. And the way to do that is start small and use break-even stops for the initial trade. Then you martingale in or double or triple into the trade as it runs and trail a stop at break-even on the way up. Now, sure, there's more churn and more action in terms of stops and all that taken. Break-even stops, though, so it's fine. One thing, here's a quick tip. If you're using a broker that has a commission, I use Fidelity, so no commissions for me. Thank goodness, but I did pay $7 a share for years, $7 a trade aside for years. But if you use a brokerage with even a small commission, put your stop not at break even, but break even plus enough to cover the commission. And that really adds up over the time of thousands of trades. So it's another quick tip. Now, Palantir, you gotta love this one, right? This has been a monster chart for us. One of my smart traders had mentioned this way back. It was like 24 a share back when he first alerted me back in summer. And we've been looking for alerts in it ever since. And it's gone all the way up here to just around 80, right? Yeah, 80 a share. So we got a shooting star, right? Again, learn candlesticks from my colleague Steve Nissen at candlecharts.com, of course. He's brilliant, and they work, right? There's a shooting star and a drop. There's no sign of a bullish recovery here, though. So when you do see a candle pattern, they're usually really good, but you will not see candle patterns, reversal patterns at every major pivot. So that's something. It's not how to say. They're great when you see them, and learning how to use them as part of a trading system is an important approach. Anyway, this is a really good range instrument, and it's gone up nicely, right? It's gone from 40 to 80 in the last few months. Now, just a few left here, and one of the things before we finish up, I wanted to cover just a quick. I'm not going to go through this whole thing for you. You can do it yourself. You can type in SwingSCANS.com, and that'll forward you over here, daytradinguniversity.com/SwingScans. Or I still have the domain SwingSCANS.com, and I forwarded it to this page for you. So it's got put together a good professional video and instructions and examples of how the alerts table works and all the good stuff you get as a member. And put a lot of work into this the last week or so, last couple of weeks, because it's worth having. And it's something that, again, unlike most educators, I am actually a real money trader, and I prove it with the 1099s from Fidelity. Of course, I could not post this and stay out of trouble if it was phony. It's not photoshopped, unlike other people. This is real. So feel free to send this to the SEC, and they'll ask Fidelity and say, "Oh yeah, it's a real one." So it is real. I did $124 million worth of order flow just year before last. So I'm a hyperactive trader. And the reason I share this is, one, to establish authenticity that I actually do trade, And number two, I've got lots and lots of experience and lessons learned. That's my whole business is based on lessons learned. All the trades I F up and screw up and lose money on versus all the ones that I win with. And what's the difference, the delta between that? That's what I teach traders and that's what I leverage. So anyway, I'm a very active guy, right? I trade a lot. And you can get this for what 97 a month or 997 a year. So this is like the pricing I used like 5 years ago, but I did not do an inflation run like my competitors. So I'm very affordable. Anyway, back to it. Let's take a look at the market. Now, one thing I always start off with in all my analyses and all my training is to have us look at the broad market using the SPY, the Spiders ETF. The reason for that is pre-market, because we're not using the ES, the futures charts. You won't have any information from the Spiders or the S&P itself, so you have to use the ETF for pre-market gap and price direction in the broad market. So that's good. And for just regular daily charts, it's good obviously to see if we're in a new breakout territory, which we are, right? Market poked itself to new high here on Thursday, so nice breakout, getting there 610. Last couple of charts I'll throw your way. Softel is one, SOFI, Sophie. I used to date some woman called Sophie. Anyway, 10 to 14, and then up to just under 18. So it's in an uptrend, so it's worth a shot at new highs, as is this one, RKLB, Rocket Lab USA. And it's did a rocket earlier, it kind of went sideways, and now it's poking its head up to new high, so also worth a shot. So let me know if any questions. These are the kind of charts that I like to teach and trade myself. And one thing I want to give you some tips on too is I would say enthusiastic recent buying. Okay, ERB, enthusiastic recent buying. And we see that in this HIMEX chart and in this chart, right? Those are the only two of the list I would give that award to. It's enthusiastic recent high volume buying on breakouts that are continuous. Those are charts that you want to start your day with, right? These are charts that are most likely to keep going. You don't want charts that are straight up because they usually come straight right back down about the midpoint, mean reversion, and bump around sideways. So you don't want to do that. But nice 45-degree, even like this, good charts. Well, thanks, John. So many Sophie earnings on Monday are on market. So what's one thing you don't want to do? Even as a swing trader, you do not want to hold into earnings. I learned that the hard way. I only had to learn it once, but I learned it painfully back in the year, I think it was 2001. I hold Oracle overnight, and it was $30 a share or 32 a share, and I held 300 shares overnight. It opened up at 15 a share after earnings. So, and I took a big haircut on that, and I learned never again. So I don't hold into earnings. So that's one thing that you want to be aware of, or at least minimize, cut your size way down because it's risky, and you don't want to gamble, right? We want to make money. We don't want to gamble. So thanks. Appreciate that, John. So these are the kind of charts I like to cover in the room and also here for swing traders for our current market. So anyway, wanted to give you an opportunity to just take a look at this and a quick bonus too. Let's say, I was going to do some big sale. I don't think I'm going to make time for that, but for you guys, I'll say, if you want to try both my live room and SwingSCANs, if you join the live trading room for like 1 year, I'll throw in SwingSCANs free as a bonus. So it's like a BOGO, right? Buy one, get one. So you want to try SwingSCANs, and I'll give you a discount on it too. I think regular price is 22. I'll go as low as say 1997 on that for the room for a whole year, plus this for a whole year, and 1997 if you want both. And if you want just this, that's fine. You can try for $100 a month, 97 a month, or for 1 year for 997. So good pricing. It's like the 5 years ago pricing in our current markets, and it's good. I think I know my stuff. I've learned a few things along the way, most of what not to do as well as what to do, and the difference is largely things that aren't. Unfortunately, I think my lessons learned in trading over all these years and all these millions of dollars worth of order flow is that none of it is what they teach you in the dang books, right? Most of the trading books are written by people who don't trade, which is unfortunate. It's like learning how to golf from somebody who writes a great golf book and it sounds great, but it doesn't work in the real world. That's like a lot of trading books out there that, am I right? It's like when I moved, I threw away all my trading books because none of them were good, except Steve Nisson's and Harry Boxer's. Those two are good, and Larry McMillan, but those are a few rare ones. But most of the books out there are, the mental stuff is helpful, but the actual trading stuff is no go. It's not good because most of the people who write books don't actually trade. So, so what I learned is things that they didn't cover in the books, all the tips and the tricks of the trade that they don't teach you. I learned actually the stuff that I learned the most helpful was with my institutional clients, with guys who are market makers and specialists on the exchange. They teach me stuff that you never read about in books to the public, right? It's stuff that's off the radar for the general public. So that's what I learned and how to apply it in our current markets. Hopefully make everybody do well with their trades and give you a shot at actually making this thing work, right? So think that's about it. Let me know if any questions. Oh, big turnout today. Good to see folks from around. Wow, so many familiar faces too. Good to see you guys here and ladies. Huh? Hey, Nan. Hey, Meryl. Hey, Paul. Hey, Phil. Paul's. Hey, Rick. Hey, Rita. Hey, TJ. Hey, Tim. Hey, Tony. Valerie. Yeah, a lot of people. A lot of familiar faces. Thank you, folks, for being here. I really appreciate it. And that's about it. I like to keep my webinars short and sweet, right? Unlike other people that go on these long pitch fests or side rambles and that kind of thing, I like to keep it focused and to the point because time is our most valuable asset and we don't want to waste it, right? So let's make the most of it. Do join the session or do join the sessions if you want to give me a shot. It's at SwingSCANS.com. We'll get you here. I put together this really cool video. You might want to look at it and hired this guy to tell you what I want to tell you. And that's it. So anyway, take care, trade smart. I hope this has been of service to you and give you some valuable tips and really good picks. I'm really good at stock picking. That's one thing I've learned over the years is the difference between what actually usually works and what doesn't. And I filter very hard. I used to filter like this much comparatively. My filter used to be this big. Now it's like this big. I know so many things that disqualify so many charts and get the cream of the crop for our swing scans and live trading room members. So you might want to consider SwingSCANS. Give it a shot. Hope I've earned your trust or at least your interest. And have a great rest of the weekend. So take care, trade smart, not often, and make it work. See you guys next time. Bye for now. So SwingSCANS.com will take you there.